Hello everyone, this is Nick Perry at Schaefer's Investment Research with your chart slideshow for Friday, December 28th. Today I am back with my weekly check of the broad market. In last week's chart slideshow, I introduced a new format. Basically went away from the showing all four charts at the same time with little thumbnails of them to an expanded version and kind of drilling down on them. So far the feedback has been generally positive, so I'm going to go ahead and continue with this. When I left off last week, I was basically focused on the Russell 2000, the IWM, basically talking about this support down in here. We'd seen a bounce off there, and I said, we're kind of watching to see how that played out. I don't know, it's hard to say. We saw the bounce here. We've now seen a little bit of a pullback, but we're still holding well above that. The basic themes of last week were looking for the small caps to hold above support, which they did, and also looking for the action to sort of dry up this week with the Christmas holiday. As far as evidence of the action drying up, let's talk about the SPY, which tracks the S&P 500. We'd been talking about two main themes here. Basically, you've got the trading range that's defined at these levels here. Let me clear off the chart. But recently we talked about the idea of contraction of the range. We had this low, we saw a higher low here, and then we've got an even higher low here. As far as the highs, we had that high, and that high. Sort of connect the dots. You can basically see that the action is just sort of drying up. We're just sort of drifting, and the range is just contracting. Usually, I tend to view that as when you see these contractions, you're looking for a break, basically sort of looking at it as the market's storing up energy. I know that's not exactly true, but it helps to think of it in those terms. Turning to the cubes, which track the NDX, the Nasdaq-100, we see contraction of a different sort. Basically what we talked about last week was that low and that high being, that's one range, and now we had a smaller range within the larger range, and that's pretty much held. We pushed up into this high right here, and then we're kind of backing away from it. So again, action's drying up, people are stepping to the sidelines. Alright, so as far as what I'm going to be watching over the next few days, we turn back to the small cap chart here, the IWM. Again, those lows, I'm really expecting the action to sort of be wishy-washy on Monday. I don't expect a whole lot to come out. It's closed on Tuesday. Wednesday we start the new year, so you start to get people funneling back in. So by the end of next week, we should start getting participation back up and see a little bit more excitement out of the charts. So right now, as far as next few days, keep an eye on those lows. I don't know if I would expect that to get hit on Monday. That'd be a pretty drastic move, so we'd have to have some sort of event come out. So watch that. Looking at the SPX here, again, we've got that contraction of the range to keep an eye on. Again, maybe by the end of next week we start to see a breakout, and that'll give us something to talk about. Ultimately, those highs and those lows are where the action's going to get real interesting. Right now we're in the middle of the range. So anyway, that's what I'll be keeping an eye on. I'd like to wish everyone a happy and safe New Year's Eve, New Year's Day, and a prosperous New Year. And I'll talk to you next year.